Tata Motors commercial vehicles roared ahead with an 8.73% surge this week. While the Nifty 50 itself closed higher by 2.35%, let us unpack the forces behind this broad rally and where the market might be headed next. The Nifty 50 kicked off the week at 23,080.7, touched an intraweek high of 23,645.35, and a low of 23,070.15, before settling at 23,622.9. That 2.35% gain signals a decisively bullish mood, fueled by easing global crude prices, encouraging domestic macroeconomic data, and a fresh wave of optimism in rate-sensitive sectors. Banking and financials took the lead, while it felt the weight of global headwinds. Now let us break down the individual movers. Tata Motors commercial vehicles shot up 8.73% to close at 390 rupees 30. The rally was sparked by better-than-expected monthly wholesale numbers for the commercial vehicle segment, coupled with the government's renewed infrastructure push. With the EV transition gathering pace and fleet replacement demand picking up, traders piled in. Watch closely the 400 rupees level. A clean break above that psychological mark could open the door to fresh highs. Any dips towards 370 rupees may attract strong buying interest. ICICI Bank advanced 7.25% to end at 1340 rupees 80. The private banking giant rode a wave of sector-wide optimism as bond yields softened and anticipation built around a potential pause in rate hikes. Robust loan growth guidance from the management and stable asset quality metrics added to the bullish case. The stock is now hovering near its 52-week high. Next week, keep an eye on the 1380 rupees zone. Sustained momentum above that could trigger a fresh breakout. On the downside, 1280 rupees remains firm support. Axis Bank wasn't far behind, climbing 6.96% to 1356 rupees 30. This move came on the back of strong institutional buying and a positive brokerage note highlighting its improving return ratios. The bank's digital push and steady deposit franchise are seen as long-term levers. The stock has broken past a key resistance at 1320 rupees, turning it into immediate support. A sustained move beyond 1400 rupees could attract momentum traders. Volumes surged this week, confirming the conviction behind the upswing. Infosys, on the losing side, dropped 3.96% to 1116 rupees 40. The IT major faced selling pressure as global tech spending fears re-emerged, especially after cautious commentary from U.S. peers. Concerns over delayed deal closures and slower discretionary spending in the BFSI vertical weighed heavily. The stock slipped below its 50-day moving average. For the coming week, the 1080 rupees to 1070 rupees band is critical support. A breach there could accelerate the decline. Upside resistance now sits firmly at 1160 rupees. HCL Technologies mirrored the IT pain, declining 3.62% to 1109 rupees 60. Similar anxieties around near-term demand in key markets dragged the stock lower, even though the company's services pipeline remains relatively resilient. The fall pushed HCL Tech towards a consolidation zone from last month. Keep a close watch on the 1080 rupees mark. If that holds, a rebound towards 1150 rupees is plausible. Any negative news flow from the U.S. Fed or a spike in the dollar index could prolong this correction. Turning to institutional flows, FIIs were net buyers this week, injecting over 5,000 rupees crore into Indian equities, a sharp reversal from the previous week's tepid participation. This buying was concentrated in financials and capital goods. DIIs, on the other hand, chose to book some profits after the recent run-up, emerging as net sellers to the tune of roughly 2,000 rupees crore. The divergent activity suggests strong global confidence in India's growth story, but also hints at domestic caution near record highs. If FII inflows persist, the market could scale new peaks. A sudden pause, however, might trigger a short-term consolidation. Wrapping up, here are 3 tactical thoughts for the week ahead. First, the market tone remains bullish, but with IT underperforming and banks stretched, sector rotation is clearly in play. Keep your watch list focused on domestic cyclicals. Second, the Nifty must hold its immediate support near 23,300 to maintain the current momentum. A breach could drag the index towards 23,000. On the upside, 23,800 is the key resistance to conquer. Finally, an actionable idea. Consider building positions in select high-quality banking names on dips, while trimming exposure in IT stocks that are struggling to hold key moving averages. What was your top pick this week? Drop it in the comments below. If you found this recap helpful, hit that like button and subscribe for your weekly market blueprint. This video is for educational purposes only, not investment advice. Please consult a SEBI-registered advisor before investing.